Hi everyone, a very good evening to all of you, and thank you so much for joining us early or on time. We'll now begin tonight's webinar session. So tonight actually we are quite excited to share with you some of what we have in store on an educational perspective on why trading matters and what opportunities lie out there, how you can learn to be a better trader. So for those of you who are joining us for the first time, we are part of the Back to Basics webinar series. And we will now begin tonight's webinar session. So thank you for being early, and we'll get started right now. So hopefully you guys managed to actually scan the QR code that you see on your screen. That will bring you to our website where you are able to see more insights from myself and the team over here at OCBC Securities. Not to worry if you have not yet, we'll be guiding you also at the end of the webinar on how you can find out more insights from the team. So tonight's topic is actually why trading matters. This is part 2 of our webinar series. The first webinar we had, why trading matters, is actually was actually conducted last month. And is an introduction actually along the rest of our webinars for Back to Basics, where we'll actually be covering how you can get started on your trading journey. Before we begin, some quick administrative matters, and also in terms of disclaimer over here for your information and reference. If you have any questions, do keep them till the end of the webinar presentation, and I'll try to address them. And you can drop them into the chat below that you see in the Zoom app. Or otherwise, fill it into the Q&A box as well, and I'll be happy to try and address that. So yeah, a quick introduction to myself. My name is Chankin or CK. I'm a markets analyst here at OCBC Securities, and actually together with the team, together with Sam and Troy, we bring to you the latest insights, news, updates, all the juicy stuff that's happening in the markets. And so, yeah, we'll be happy to engage you along the way. And together with myself, also Samuel conducts a separate webinar series covering the latest market outlooks and trends, and that happens on a monthly basis as well. So tonight is actually part of a broader Back to Basics webinar series. We are on part 2 of it right now. And the next session will actually be covering some of the other basics such as technical analysis before we go on to some of the trading tools that we have out there, some of the techniques that are being used by the investment and trading professionals out there, and looking also beyond Singapore to some of the foreign markets out there. So this is a year-long series of webinars that we have actually specially curated and conducted last year as well as this year, so that we can actually help you along no matter where you are in your trading journey, whether just starting out or whether already an established trader wanting to get a refresher course. So tonight we'll actually be covering some basic topics on what traders look at, what moves the market, what matters to the market. And I'll be doing a quick recap actually before that on what we covered previously. Last month in our previous Why Trading Matters Part 1 webinar. So we talked a bit about trading versus investing, factors and sectors, and we touched a little bit on what moves the market, but we'll be actually looking at that in more detail tonight. So we'll be digging deeper. We'll be looking at 3 areas in particular on what moves the market. So areas such as news, where we look at both macro and micro news, areas such as fund flows, technicals, things like trends, things like even market psychology, behavioral finance, and after that going on to the macro environment, things such as your economic and market indicators as well. So quite a lot of information. Feel free to drop any questions that you have into the chat box or into the Q&A box, and I'll try to address them at the end of the session as well. But to begin with, we'll start off with a recap on what we covered last month. So we talked about trading. We talked about, in particular, the basics of trading and the psychology of trading when we learned about the difference between trading and investing. So we talked about how trading is short-term, investing tends to be long-term. Trading also, we tend to look at technical analysis because we are looking at in and out, short-term movements, in some cases even on an intraday basis. On the other hand, if you're looking at investing, we tend to have a longer term horizon. We tend to do things like buy and hold. For all the fundamental analysis we do out there, all your analyst target prices, it could be something like 12 months or maybe even longer. We talked about why there could be a case for trading. Actually, we looked at the market condition right now, especially in our COVID and post-COVID era, and we talked about how the current climate in the markets actually is filled with a lot of big swings and volatility, and that's something that traders might be able to capitalize off. So we talked about actually in terms of percentage of trades happening in the market, what percentage are fundamental and what percentage are actually purely technical. Now, next up, we also talked about sectors and factors. We talked about how different stocks have different characteristics to them. So we talked about in terms of sectoral exposure, such as your banks to financial exposure or your IT. And we also talked about factors, which is slightly more complicated, but basically the entire idea of different investing and trading styles as well. Different factors drive different parts of your risk and return. So with all of that, actually, we covered quite a bit about the basics of looking at a stock, looking at, okay, what sector is it or what factor is it exposed to? Now we are going to be looking at it a little bit more broadly. We're going to be looking at the markets. We're going to be looking at the stock market and things that affect the stock market, what moves the market, and how some of these different markets, whether currency or bonds, could affect the stock market as well. So we'll dive right in right now. So what we covered briefly in our last webinar session, actually, we talked about the idea of price. And some of us might have taken econs in JC level, but maybe forgotten. But the entire idea about price is this idea about demand and supply, where demand meets supply, right? So there's this idea in the trading world, and this is actually a quote by John Murphy, one of the people who are very, very famous in the trading world. And he says, market action discounts everything. So he's a believer in technical analysis, he's a believer in price action and how the market, end of the day, discounts everything. So it's this idea behind market action actually. End of the day, prices reflect everything. It reflects your demand, it reflects your supply, and where they meet, prices reflect everything. So that could be fundamental, such as a company's outlook when it comes to the cash flows. It could be political, such as the political climate in the US or in China, how they interact, and how traders are looking at whether that's good or bad for the Chinese stock market, for example. It could be psychological as well, whether people are very afraid of the Chinese stock market, same example as before, or whether they are very bullish about it, whether they are feeling like there's a lot of opportunity right there. So prices reflect everything. That's the idea behind a lot of technical analysis, behind a lot of what we'll be talking about today, and some examples of things that could affect prices. Things like news events. So most recently, many of us, of course, we are aware of what's happening in Ukraine and in Russia. So news does drive a lot of the movement in stock markets, and that has been widely reported in various news outlets as well. It could be company earnings. So company earnings that are upcoming, Xiaomi, Tencent, a lot of the price movement might be affected because of what the company CEOs are going to be saying during the earnings outlook, whether that's something that is positive for the company in the short term or long term. It could be economic indicators. Some of the people in the market are actually looking at whether or not there's going to be a next recession coming soon. And some of the indicators that they look at could be important to how the market reacts. And lastly is the idea of market sentiment. This is a little bit harder to judge, but it's the idea of really what are other people in the market feeling at that point in time, whether they are feeling very optimistic or whether or not they are feeling very pessimistic. And so that affects how they trade into the market, whether they are more cautious or whether they go into the market more aggressively. So we'll be looking at three main areas, like I mentioned, the idea about news, the idea about what is happening on a news front could include things like fiscal policy, your government spending. So an example many of us are familiar with would be how the Singapore government has so many budgets happening in the COVID era during 2020, because there's a lot of support coming from the Singapore government, and that affects your companies within Singapore as well. It could be looking at monetary policy, so things that the US Federal Reserve or the US Fed is doing in terms of its interest rate policy, or the People's Bank of China, PBOC. It could be macro news, something like what's happening in Ukraine and in Russia that affects things like oil prices around the world. It could be corporate news, like what I mentioned, which is company specific, or it could even be something like analyst news, which is something that maybe many people look at for some of the global banks out there, what their analysts are saying in terms of the outlook for some of the companies. Now, fund flows. This slide should be familiar to you if you attended our last webinar last month. But the idea about fund flows is a little bit more complicated, like I mentioned, talking about actually some of the more technical movements. So things like whether or not the stock is in an equity index, things like how much volume there is in the trading activity, things like whether or not there are any hedge funds or mutual funds out there that are positioning themselves, and you can see that buy and sell trading activity. We'll talk about that a little bit more in the next section. Lastly, macro environment, things like your interest rates, things like your gold, things like your volatility of VIX index, or even things such as your oil prices, commodity prices. These are things that we see very, very real and very, very applicable and relevant to us in this day and age as well. So such as your exchange rates in the US, in Singapore, against the other currencies as well, that definitely might have an impact on what you're looking to buy and sell when it comes to stocks itself. So we're going to be diving into each individual category. And like what I mentioned, we start off with news. I think this is something that might be the most easy for us to understand, easy for us to actually apply as well, because we are surrounded by so much information these days, so many news outlets out there. It could be your Yahoo Finance, it could be your Bloomberg, CNBC, and these could be very useful for us to get started with on our trading journeys. So like I mentioned, news can be either general or company specific. The idea about why news matters is because news actually introduces new information that needs to be processed by traders, investors, or just people in the market, people like you and me as well. Looking to buy and sell a stock, we want to know what's the latest news, either on a broader front or in a more specific company front. So some examples of news, like what I mentioned earlier, we have things that are happening on a government front, because government spending affects things like your businesses. So an example would be support packages. Maybe for a company like SIA, we have seen how the Singapore government came in to support them, and that definitely impacts their financial statements at the end of the day. So when traders look at this piece of news, intuitively they'll start to think, okay, so what's the impact on certain stocks that I'm looking at, or certain sectors that I'm looking at? And that's where the new information gets processed, affects their buying and selling decisions, and ultimately affects the price of the stock. So same thing, monetary policy, to break it down, a lot of people would understand monetary policy as what the central bank does. In the case of Singapore, the MAS. In the case of the US Federal Reserve. So interest rates, something like that, it will affect costs for a company. Take, for example, a company that wants to borrow to invest and build a new plant, for example, to manufacture something. So the interest rate affects how much the company might be able to borrow and how it's able to also service that debt. And so something on a broader front, such as monetary policy, would impact the company on a more specific company front. Now, something like macro news could be something like the discovery of a vaccine for COVID-19. That definitely changed the outlook for many of us on how a company would do in a COVID environment. And same thing, even something beyond that, such as learning to live with the virus, an endemic stage, and the reopening that comes with it. That could be something that affects your business opportunities and outlook as well. Corporate news would be something such as the hiring of a new CEO, or it could be a new direction for a company. One very well-known case could be, for example, the idea of Citibank. So Citibank was actually a bank that many of us are familiar with. But if you look at the corporate news or the corporate front, how the company has been going through a lot of restructuring, a lot of changes in how and what it is exposed to, then you can see how that affects the company on a more specific front, such as how the company has decided to divest some of its holdings in the ASEAN markets to UOB that many of us might have seen in the news. Now, lastly, analyst news, like what I mentioned earlier, it's really how professionals, how people value a company or how they look at the outlook of a company. They process what the company is saying and they digest it and they release that information to the market. And whether or not people follow that same view or whether they oppose that view. So it's the idea of people being influential, people having certain views and that being adopted by the market, and that could impact the stock prices themselves. So these are some examples of macro and company specific news, not just what I said earlier, but also it could be anything that affects a company on both a broader front as well as a more specific front. So like what I mentioned earlier, vaccines or US presidential elections, which impact the US budget and impact what the US might be spending on infrastructure, for example. It could be OPEC cuts, such as how the impact on oil prices could affect a company, or even something like a trade war and how different companies need to adapt to that new environment. Meanwhile, for company specific news, it could be something like your earnings and the actual numbers themselves, or also the outlook, the guidance that people get from the earnings. It could be things like dividend, very popular, especially for the Singapore REITs and for the Singapore banks as well, because dividend changes a lot of how we will look at a company, whether it gives a high or low dividend. It could be something like regulation that we have seen it happen to some Chinese big tech companies as well, or even fraud, which is the unfortunate case of companies like Luckin Coffee that some of you might have read about. So this is an example. So we've seen, okay, Pfizer vaccine trial. This happened in November 2020. And we have seen how a company like Singapore Airlines actually, as a result of this, on the day itself gapped up about 21%. And not just SIA, but the entire airline index actually closed up about 20%, just on the news of the vaccine trial being a success as well. And meanwhile, for something like a company specific news, it could be something like the halting of Ant Group's IPO, and Ant Group being affiliated to Alibaba. We have seen how the stock price for Alibaba, this is a chart that dates back to November 2020. And how on the day itself, Alibaba already lost 7.5%. And of course, we know that eventually resulted in Alibaba actually coming down even further since that announcement. So there are many, many different places that we can get news sources. And the idea is not for me to tell you what the latest news is. Of course, our team will be happy to do that. And we do that during our monthly webinars as well. So you can stay tuned for the details of our next session. But beyond that, beyond what our team also puts onto our IOCBC website, where we cover some of the latest news and trends, we also have many, many sources that are available for free. And so these are some examples that I'm sure many of you might be familiar with: Bloomberg.com, Reuters, Investing.com, CNBC, or Yahoo Finance. But like I mentioned, actually, what our team does is we actually compile a lot of what we see out there. We are involved in the markets day by day, and we know what is really moving the markets. And so we highlight some of that newest trends or latest trends to you, and we post them onto our website as well. So those of you who are early for this webinar, actually you managed to scan that QR code on the slide. This is the same QR code which brings you to our website, where you're able to see on a monthly basis what our team churns out. And it comes to the latest market narratives to keep you updated. So this is an example actually of some of our latest market updates when it comes to news focus or our thematic pieces. So we actually covered some of the major themes that the markets were looking at in 2022, and that was in January when we released this piece, and we talked about how the narrative is shifting away from COVID-19, but it's still there. We talked about interest rates and we talked about inflation for the central banks. And we also talked about the idea of China. Of course, at that point in time, we didn't know about the Russia-Ukraine crisis, but many of these three themes is still relevant even to this day and even right now in March. So vaccines and virus, we talked about it, and now China is facing this same struggle. Interest rates, we have seen the US Federal Reserve just hike and also put out a very, very aggressive hiking schedule ahead. And of course, China, we have seen what happens with we have seen what happened with the Chinese stock market in the latest announcement, and how they have actually been routed but also recovered on a very sharp dip as a result of some of the announcements out there. So these are just some examples of what we have actually covered, along with some of the latest inflation, geopolitics, and how the big global banks out there are also navigating this environment, what they're recommending, and things like that. So do stay tuned for that. I'll show the QR code again at the end of the slideshow. But this is just an introduction of what we do that actually helps you actually stay in tune with the market. Just very quickly also, we do cover also on a single stock basis some of what we have seen for the hot stocks that have a big piece of news out there or just a big piece of price action and movement as well. So we do cover both a technical and fundamental perspective on these stocks and how some of the newest trends or events could have impact on it. So for example, how the defense stocks rallied really hard as a result of the Russia-Ukraine crisis, or how the US banks were affected by the latest inflation and interest rate outlooks as well. Okay, now we move on from news to the second part, which is fund flows. And this is something which is a little bit more complicated, like I mentioned. So the whole idea about looking at fund flows is because actions speak louder than words. And by actions, it's price action, it's market action, it's what the participants in the market are looking at. So many traders out there actually look at fund flows, not just news, because fund flows actually helps them to figure out what other market participants are doing. So whether they are buying or selling, that impacts the stock price. And so that shows sentiment in the market. That shows you whether or not people are bullish or bearish in a certain scenario. So for example, if you look at an equity index and you see that, within the S&P 500, for example, we see a lot of positive movement in the energy names, such as ExxonMobil or Chevron. A lot of negative movement in your tech names, such as Apple, Microsoft, some of the big tech. That certainly tells you how the market is actually positioning and looking at how they are going to navigate the current trading environment. And so that actually tells you, okay, so the funds are all moving towards a certain sector, for example. So not just looking at the S&P 500 as a whole, but also looking at how the funds are distributing and shifting their money around. Similarly, for China, we have also seen the impact of this stock connect that's happening between China and Hong Kong. And so we can see how international investors are positioning themselves for some of the Hong Kong or Chinese stocks, how the mainland retail traders in China or institutions in China are actually also similarly positioning themselves. We look at a very important aspect of trading, which is volume and turnover. We'll cover a little bit more about that in our next session when we talk about technical analysis. But the whole idea of not just looking at price, but also at volume, and also on a broader scale, such as looking at the exchange volume. So we can see, for example, during the December period, that there's less trading activity. More traders maybe are clearing their leave. And so with less trading activity, there could be less volatility. Things like that depends, of course, on the broader environment, but it's definitely useful information for traders out there. For ETF flows, passive investing, we look at how some of the ETFs have also bought or sold certain stocks or included certain stocks in them. Abnormal stock trading volume and price certainly tells you whether or not there is a big fund out there that maybe is buying and selling aggressively. So the whole idea about fund flows is actually to look at it both in a long-term and short-term perspective. And we have to remember, markets are actually for everyone, right? So there are the people who are day traders, there are the people who are long-term pension funds looking at 30 to 40 year of investment horizon. So fund flows and market action, it reflects what market participants as a whole are doing. And like I mentioned, it can be short or long term. So these trends, they tend to be related to news, which is what we covered earlier. But sometimes it might not be immediate. And so it's a little bit harder to gauge what people are doing through fund flows. But here are some examples of what fund flows and looking at them and looking at how that could impact the stock price, how that might look like. So this is an example that some of you might be aware of that happened actually post-COVID, but as a result of the trade tensions or US-China tensions as well. So there was one point in time, I think it was in 2020, or 2020, I think 2020, where MSCI and FTSE actually they decided to drop Chinese telcos because of this tension. And so they decided, okay, these Chinese telcos, such as your China Mobile, they can no longer be listed in the New York Stock Exchange, and they have been hit with certain blacklisting, certain sanctions. And so actually on the day itself, there was a lot of selling by overseas investors, and that can be reflected actually in the trading value over here, or the turnover over here, which is $44 billion. Yeah, to put it into context, the normal daily turnover or normal daily traded value that happens in the entire SGX is about 1 billion Singapore dollars. So $44 billion for a single stock. Definitely a lot of trading activity. And because of the negative news that China Mobile can no longer be listed or included by some of these indexes, that resulted, of course, in a drop. So we have seen that price action play out when China Mobile, when a lot of investors and traders needed to sell off their holdings of China Mobile. So yeah, normally we look at some big cap stocks maybe being heavily traded, but sometimes there's abnormal movements such as this because of a huge shift in what the company and what the investors can invest in. On the other hand, we also look at something that is not so explosive, not just really like restricted to a single day of trading. And we look at some sustained trends over the past years. A look back to 2020-2021 period, where there are some market trends that have taken place or are still taking place since COVID hit. So we are looking at how, for example, in Hong Kong and in China, we have seen some IPO listings or the homecoming of certain companies. Biggest example being Alibaba, listed in the US as an ADR, but also now secondary listed in Hong Kong. We have seen an acceleration of e-commerce and the adoption of e-commerce. We have seen Lazada, Shopee locally, but of course in the US, players such as Walmart or Amazon. We have seen the growth in popularity of electric vehicles. So maybe just walking along the streets, you'll be able to see BYD, or you'll be able to see Blue SG or Tesla. But this is part of a broader shift as well. And we have also seen in the US, especially in the start of 2021, the rise of the US retail trader, more retail trading activity brought about by brokerages such as Robinhood that have brought about zero commissions trading. So from all of this sentiment and how some of these trends have played out, how does that impact the stock itself, and what can we learn to trade with? So an example, we look at Hong Kong and we talk about IPO listings. This was very popular in the end of 2020, all the way until 2021 before the Chinese government started to crack down a little bit. So we have seen this actually come in through the Hong Kong dollar and the strength of the Hong Kong dollar. So initially in 2020, Hong Kong started to have a lot of IPOs, particularly from those who are listed in the US coming back to Hong Kong. And we've seen the strength of the Hong Kong dollar highlighted on your screens in the white box there. So the Hong Kong dollar actually moved downwards on the graph, which indicates strength and actually hit its limit. So a lot of funds were coming into Hong Kong to buy the Hong Kong IPOs. They needed Hong Kong dollars. Hong Kong dollar was really strong. And subsequently, we all know how the China tech crackdown played out. We know about some weakness in the property sector in China. So Hong Kong started to see less and less IPOs. And so we have also seen the effect play out in the Hong Kong dollar. People don't want the Hong Kong dollar so much anymore. They started to sell off the Hong Kong dollar, and Hong Kong had a drier spell for IPOs. So we see some weakness, the movement of the chart upward for the US Hong Kong dollar rate. And consequently, for a stock like Hong Kong Exchange, for all the movements in the IPOs, how has the fund flows actually played out? So we have seen in the period of time where the Hong Kong dollar was highly sought after, a huge rally in Hong Kong Exchange stock price. And subsequently, with the drying up of IPOs and Hong Kong Exchange being impacted, of course, by fees, we have seen how actually the stock price has come down. So this is an example of how broader fund flows and macro news actually impacts a stock such as Hong Kong Exchange. Similarly, we use the example of the retail trader, and there's this piece of news in 2020 talking about how retail traders at one point in time actually make up for 25% of the stock market in terms of trading. And so we have seen how many of them, perhaps due to COVID, staying at home, decided to enter into the market and decided to trade in the market. And they used to make up just 10%, now they made up 25%. And the retail traders, they had a certain basket of stocks that they favored. Most prominently would be GameStop in 2021, early 2021. So how, because of the trading activity, it actually impacted this entire basket of stocks, and how the retail stocks in 2020 outperformed some of even the hedge funds in 2020, because all this trading activity went into some of these stocks as well. Lastly, we talk about some broader trends that happens over decades. Some of these trends are identified by BlackRock. You can just take a quick screenshot or a look at them. Talking about how technology has changed, how certain demographics would be moving towards shifting economic power from the US maybe to China or maybe elsewhere. Climate change, we talked about electric vehicles, demographics, aging populations, or urbanization as well. These are broader trends and they might not go away that quickly. And so some of the investors and traders out there are very invested in these trends and want to participate in these trends. And that could reflect also eventually in things like your valuation, things like your PE ratios, how some technology stocks might have higher PE ratios than others. So what we have to help you along with this fund flows and help you along with this understanding what's happening in the markets from that perspective is actually, we have a trader's journal as well. So this is on our website. Just running through quickly, what we offer as well is online. When you download this trader's journal on a monthly basis, it kind of just covers what's the latest news that's happening and also how some of the stocks have been moving. The biggest movers in the S&P 500, Hang Seng Index, and Straits Times Index. So it gets you a sense of what the traders are watching in the markets. Now, lastly, we'll be looking at macro indicators. So we have talked about news, we have talked about fund flows, and now we'll be looking at macro indicators. And macro indicators particularly look at things like your economics, economic indicators. So what stocks are, the stocks are about a single company, but generally a company will be operating in a broader environment. And so macro indicators gives us a sense of not just the company, but also what's happening on a broader environment across the entire Singapore, across the US, or even globally as well. So this is related to news, but it's also some indicators that could be very, very useful for you to look at beyond just reading the news. So the overall macro environment is, of course, correlated with what's happening in the stock market. In fact, some people use the stock market as an indicator of the macro environment, of the economy as well. Reason being, of course, that company earnings, their business decisions, how they gauge spending for customers, all of this is impacted by things like your government policy. It's impacted by things like your inflation rates as well. So some macroeconomic indicators to take a look at, things like your interest rates. It's very, very hot right now as a topic, of course, because of the US Federal Reserve. Things like your bond yields related to your interest rates as well. So things like your 10-year treasuries. Gold prices that got a little bit of attention recently in the flight to safety as a result of Russia-Ukraine. Volatility, a little bit heightened as well this year in 2022, measured by the VIX index. Your futures and FX, some people will be commenting about dollar strength or weakness, looking also at things like your Chinese yuan, things like your safe haven Japanese yen. Of course, quite popularly recently, oil and commodity prices as well, they have been shooting up. They contribute also to inflation. So the idea is that the stock market does not exist in isolation, and certainly not your individual stock even. And so economic indicators help traders to get a sense of what's happening on a broader front. And generally speaking, when there's a recession, the stock market might not do as well. We'll look at that in a little bit. So we look at interest rates and monetary policy. How can that indicator affect the stock market? And we look at it, and I mentioned a little bit earlier, how that could impact your cost of borrowing, because a company that wants to borrow to invest in a new manufacturing plant will now have to pay a higher interest rate, for example. That affects its business decision at the end of the day. Similarly, employment and jobs data, that's something that is very important as well. Together with inflation, unemployment is actually one of the things that the US Federal Reserve definitely looks at when deciding what interest rate to peg. We look at also production and consumption data. So some of these figures, maybe most of us are familiar with GDP, but beyond that, there are other economic indicators as well. They are released on a more frequent basis than a quarterly GDP basis. And then finally, there's property prices as well. And that also tells you a little bit about sentiment from the consumer. So property prices, and not just property prices, but also oil prices or indicators such as your wages, they definitely affect your economy and consequently also the companies within the economy that we are looking at when it comes to stocks. So here's an illustration, and I mentioned that earlier, talking about recession, talking about the stock market as well. And so this is the S&P 500 that is displayed on your screen over here. And we look at the 2008 financial crisis or the Great Recession, and how over 2008 and 2009, you have seen real GDP growth actually negative. So minus 0.1% year on year and minus 2.5% year on year. So the economy was not doing well, and the stock market actually reflected that reality in the stock prices as well. And more recently, for many of us, actually, we looked at US real GDP growth in 2020 and the COVID crisis, the March crash in 2020. And we have seen how GDP actually tanked 31% quarter on quarter before rebounding 33.4% in Q3. And so that could help to explain why the rebound in the stock market in the US was actually so sharp as well, because the stock market consists of real companies that are impacted by the economy. So different economic indicators have different usefulness, and they also indicate different aspects of the economy. We look at main categories for economic indicators. We have, first of all, leading indicators, and these can be very useful because they are predictive in nature. So rather than just looking at unemployment rates, we can look at one of these indicators such as initial jobless claims, which is a measure in the US talking about how people are, initially jobless and they actually submit claims, and the number actually is a leading indicator of the broader unemployment number as well. So you see, okay, there's a spike in initial jobless claims. That is not good for unemployment rates. We have coincidental indicators. So rather than being something that's leading, it's something that's descriptive as well. So something like non-farm payrolls, that's again a measure of unemployment in the US, and it measures the number of people who are actually being paid, right? So the non-farm payrolls is a descriptive coincidental indicator. And then finally, we look at unemployment rate itself, which is a lagging indicator. It only comes out after the fact. So it helps you to just make a confirmation. It's affirmative and it's lagging, but it helps you when you look at it and say, yes, okay, unemployment is at a certain number right now. So like what I mentioned, because unemployment is not as quick and you might want to trade on a little faster basis, that is affirmative, but you can also look at things like your initial jobless claims, which comes out on a weekly basis. Beyond that also, things such as PPI, CPI, these are terms that you might want to get familiar with because it's also indicative of not unemployment, but inflation. And that is the other thing that the US Fed looks at very, very closely when deciding what to do with their interest rates. Now, not just economic indicators, of course, but when we look at the macro environment, we also look at market indicators. So one example that I talked about earlier is this idea of volatility. And this is measured in the VIX index, which is actually a measure of how options are being used to hedge against volatility. So if we see a spike in volatility, and these graphs are updated as of last week, we've seen a spike in volatility, perhaps due to the Russia-Ukraine crisis. And that tells us about the state of fear in the US stock market. So VIX index or volatility index is also commonly known as a fear index. Separately, we have the dollar index. This is a measure of the strength of the US dollar against a basket of currencies. And we have seen also the impact of central bank policy on the US dollar. And so maybe for us, when we are in Singapore, we want to know how the US dollar will do. So our US denominated investments, for example, our shares that are bought in US dollars and sold in US dollars, how that might be impacted as well. This could be a very useful indicator, the dollar index. We talked about gold prices, definitely impacting gold mining companies, definitely impacting the other ETFs that are exposed to gold, but also a measure of how fearful the market is again, because gold is often used as a safe haven instrument. And so when there's a spike in gold, as we have seen over the last month or 2 months, that is indicative also of the sentiment of the broader market. And lastly, over here, the US 10-year yield, often used as a risk-free rate, and also an indication of how the US Fed, what policy, what the traders are looking at when it comes to US Treasuries. So the US 10-year yield is a very useful indicator to tell you how the market is positioning itself for interest rates. So here's an example, and actually we are coming to the close of the presentation soon, but just a very useful example, and we look at how the US 10-year Treasury yield, this is an example that we zoomed in at just now, talking about the indication of US interest rates, how it has actually spiked or it has gone down as a result of the Russia-Ukraine crisis in the flight to safety, and then after that spiked subsequently when the US decided to raise its rates. Now, we look at a local bank and we look at financials and how that could be impacted by US 10-year yields. And we have actually seen how there's a historical correlation between banks and financials and US yields. So we have seen in the same period of time, when the yields came down, the bank prices came down. When the US yield went up, again, similarly, DBS share price went up. So this is one indicator that can be very useful with a direct link. And that's because profitability of DBS or any bank actually, it could be impacted by a high rate environment, and generally the margins tend to be better. And so banks such as DBS tend to do well in a higher rate environment, which explains why it moves in tandem together with the US yield. Now, another indicator is the oil prices. That was not shown in our slide of 4 just now, but this is an illustration of Brent oil. And this was extracted last week as well. We have seen a huge spike since the end of last year. And it spiked up, it came down, but there's a lot of volatility in it as well. So we are looking at this period of time that's highlighted on your screen in the white box below. Now, we again map out one of the stocks that are very, very heavily exposed to oil prices. Your ExxonMobil, which is one of the largest oil majors and listed in the US as well. And we have seen during the same period of time how ExxonMobil actually spiked together with oil prices and came down as well. And so that's because oil prices, when they go up, they make oil companies more profitable, companies such as ExxonMobil, and that is positive for the company. Subsequently, of course, if they go down, then that is negative for the company. So in summary, actually, we have covered quite a lot of content, but when we look at what moves markets, it doesn't seem so straightforward. There are so many different areas to consider and look at. And end of the day, that's true. Many different people, many different traders with different time horizons, they'll be looking at the market and they'll be looking at different stocks. And they'll be looking at how different things impact different stocks all at the same time. An example would be what we mentioned earlier. ExxonMobil, it's affected by oil prices. But it's not just affected only by oil prices. It also has company-specific earnings. It also has company-specific outlook to look at. So it is up to the discerning trader, it's up to you and me to read up, to look at the news, to look at the indicators, and also decide, adding all of these factors together, where will the market be headed, or where will this particular stock be headed, and subsequently to act on that information. So the information's out there. We know what moves the markets right now. And of course, this list is not is not the only things that move the market. There are many, many other things as well. But beyond that, also to make an analysis within our minds and to decide how the stock price might move at the end of the day as well. So it's up to the discerning trader to figure out where the market is headed, knowing that all of these different things influence a stock price. So with that, actually, we've come to the end of today's presentation. I'll be looking at some of the questions that you might have in the chat in a little bit. But first up, of course, just a quick introduction to our next session. Like what I mentioned, we cover a lot about news and the latest market insights. So actually, our next session will be spearheaded by my colleague Sam. He'll be covering some of the trading matters. This is our monthly webinar series where we talk about market movements and the latest market trends and insights as well. So that'll be happening on the 4th of April, the first Monday of April. And subsequently, you guys will join me again in technical analysis, and we'll be looking at technical analysis. That will be part of our Back to Basics webinar series. That'll be happening on the third Monday of April, which is on the 18th of April. So I hope to see many of you there, and also with my colleague Samuel when we look at what's actually happening in this current market environment. If you have any questions that I might not have time or might not have addressed during the Q&A session, then feel free to drop a note to your trading representative and some of the instructions are here, or otherwise you can also drop us a message in the chat and we'll be happy to link you up. And otherwise, thank you so much for joining us, and you can scan the QR code for some of the insights that we covered in the earlier part of the presentation. So I'll now be looking at the question and answers, and also, yeah, we'll be doing a Q&A session right now. You can also drop some of your questions into the chat or the Q&A box, and I'll be happy to respond to them as well. Okay, we have a question actually asking about price action. So I think my colleague Samuel will be responding to that question in the chat directly. Yeah. I think there's also another question that is quite commonly asked, asking about whether or not there'll be any replay for this webinar series. The answer is there we'll need to work with our marketing team as well. So we'll get back to you on that. We are hoping to get a recorded link out. Yeah, but that one is still in the works right now. Okay, so I think there's also, if there's any other questions relating to individual stocks, then I think your trading representative that's tagged to you will be best positioned to actually help you answer those questions. So yeah, do drop a note to your trading representative. They'll be happy to actually help you out on a more personalized basis as well, so that they can talk to you about any particular stock. And yeah, not just a broad answer, but also any specific stock or query that you might have related to your account or related to a particular counter, because they'll be best positioned for that. Yep. Okay, I think in the interest of time also, we will be ending off this webinar session. But we will be also answering any outstanding questions directly onto the chat or into the Q&A box privately as well. So thank you everyone for joining us. If you have any other questions, do drop them into the chat as well. We'll be responding to them, so we'll spend a bit of time on that. Otherwise, I hope to see all of you in our next session, Trading Matters with Sam, and also back again for our Back to Basics. We'll be looking at basic technical analysis in our next session. So that will be quite interesting and hopefully very useful as well for many of you. So do scan the QR code, and we'll hope to see you in our next session. Thank you so much for joining us.